The financial civilization itself is also undergoing mutation and development, especially in the past years, where the world's finance has been changing and unpredictable against the backdrop of the lingering capital. Financial civilization is increasingly showing its power. First of all, financial civilization gradually transcends industrial civilization, and its laws are completely different from the law of value of industrial civilization. When financial civilization knocks at the door, many people familiar with the laws of traditional industrial civilization are realize later and use the wrong rules of industrial civilization to calculate. The result missed out on the benefits bestowed by financial civilization. LTCM, a hedge fund company managed by Nobel laureates who are proficient in the most complex risk products and models, fell on the eve of financial civilization, and billion arbitrage funds were wiped out. When the British Chancellor of the Exchequer was about to rise in the price of gold, he mistakenly estimated the situation and left more than half of Britain's gold reserve at the lowest point in years, which caused the British government to lose at least £1 billion, leading the Parliament to ask him to settle accounts in the autumn. Secondly, financial civilization has high requirements for the quality of other civilizations grafted onto it. If they can match each other, it will have a significant amplification effect on the achievements of other civilizations. Otherwise, reverse results will occur. Former British Prime Minister Thatcher keenly seized the key to the financial explosion and implemented a major transformation of the securities market, creating a new City of London and ushering in a new era of British finance. On the contrary, the Japanese version of the financial explosion backfired, not only failing to unleash vitality in Japanese finance, but also plunging it into numerous crises. The root cause is a lack of understanding of the special laws of financial civilization. Currently, a new wave of financial civilization is quietly hitting the Asian coast. But the panic of the financial crisis, these old experiences have deeply rooted in people's hearts, making people from all walks of life afraid of what is about to happen. Southeast Asian countries that have experienced the financial crisis are typical representatives, and they have strong vigilance against the current global liquidity surplus and asset price rise. Many countries have already started deploying in late and early such as Vietnam, the Philippines, Thailand, India, etc., which have strengthened financial regulations in advance, in order to mitigate the risk of capital flight. Thailand even resorted to government intervention, which was counterproductive, while opposition to free currency floating suddenly, ownership superstition and state motivation in the first half of GDP grew by %. Foreign trade showed a year-on-year decline. Inflation was high, and small and medium-sized enterprises were struggling sad. Bankruptcy has become a trend. Regarding this situation, the relevant parties are both very vigilant and very anxious. Based on continuous meetings and discussions, they have decided to change the macro tuning from dual prevention to one protection and one control, and have made sufficient articles on protection. In terms of policy rescue itself, it is understandable. But if analyzed from the perspective of macro adjustment history, today's scene is precisely the period of macro adjustment back then. And the current situation proves the remarkable achievements of macro adjustment. The reason why we dare not recognize the macro adjustment results is that the protection and pressure distribution of macro adjustment policies is uneven, which is basically characterized by the protection of state-owned enterprises and the laissez-faire of private enterprises. Starting from the tight monetary and land supply in this end of regulation, the GEM has been delayed. Private enterprises have no access to financing, and state-owned enterprises and central enterprises can queue up to go public. The vast number of low-end enterprises in the industrial upgrading have completely lost their protection, and central enterprises take the opportunity to regain lost land and complete industry monopolies and market division, such as telecommunications. This result naturally cannot be accepted calmly by private enterprises. Therefore, the political foundation that can ensure the transformation of economic growth mode is fairness and justice. And based on this, policies can be revised the intention and effectiveness of the measures. Otherwise, the political show of Yigong Heilong will greatly undermine the government's credibility and make the cost of trial and error increasingly high. A prerequisite for establishing a political foundation based on fairness and justice is the establishment of a new concept of the country and a new concept of the people. That is, the understanding of the state transcends the violent machine in the stage of class conflict, but is independent of social entities, represents the common interests of all members of society, and takes the establishment of rules and regulations, maintenance of rules, and provision of public services as the main national motivation. Only when the national motivation is pure and selfless can the political principle of fairness and justice not be excluded. The new concept of the people is to restore the people from abstract concepts and exploitable slogans to specific individuals and interest groups. Only through the evolution of negation and negation can the people-oriented people find a realistic career, and the specific. It has contributed % of the GDP to an area of 2 square kilometers, and its development and growth have captured the benchmark of Wall Street, allowing the UK to once again enjoy the wonderful taste of becoming an international financial center in a century. Almost at the same time, the big financial explosion in Japan was manifested in the Plaza Accord, with the result that the surplus of nearly $100 million was wiped out, and the wound was licked alone in the loss of. So, the expression of the financial explosion in reality is nothing more than the booming financial derivatives market. The virtual economy has separated from the real economy into its own system and flourished, and the new game rules and institutional system will be different from the past. Capital and windfall profits will replace physical goods and growth as the theme words of the economy. The third is why the financial industry exploded. This is the general rule of the development of economic power. who is the supergiant of the world economy, capital injection, and other forms. By the end of the year, the market value of China's investment fund had exceeded trillion yuan, which was only trillion yuan a year ago. That is to say, the development in 1 year is twice that of last year's total. Statistics also show that in the number of investors opening accounts in the Shanghai and Shenzhen stock markets reached 1,000, with an average of over 10,000 accounts per trading day. In the context of global liquidity surplus, the opportunity for concentrated release has finally emerged, with the accumulation of years of sustained high-speed growth energy in the national economy, enhanced profitability of enterprises, appreciation energy of RMB, and enhanced international competitiveness. Although facts have proved that the soaring stock index and the instantaneous expansion of market value are unsustainable, both the number and scale of institutional investors such as investment fund, QFII, QDII, and hundreds of millions of individual investors, as well as the equivalent of financial assets accounting for half of the stock market, and the degree of securitization of state-owned assets indicate that China's economy is undergoing sustainable and irreversible structural changes, and the capital market is becoming the country one of the most important wealth investment and management platforms for enterprises and the people, shifting from excessive reliance on bank savings to the capital market. China is entering an exciting great era from the commodity era, the era of capital finance. Monetary economy based on credit, but with the increasing growth of financial derivatives, credit has gradually been hijacked by a group of people who love to tell stories and lack integrity, leading to the most abusive use of credit in financial civilization. The most lacking aspect is integrity. The reason why the subprime crisis triggered a run on banks was not that creditors did not believe in the strength of financial institutions, but that they did not believe that other creditors would believe in the short-term nature of the bank's crisis and would make rational choices to support each other. On the other hand, although the financial crisis is not driven by morality, it will ultimately change morality. If agricultural civilization is shortage economy through the 3 cardinals and 5 constants to curb human desires, industrial civilization is an excess economy that tempts and indulges human desires through advertising culture. The financial civilization is an economic bubble, forging yin and yang people by telling stories. Many overseas hedge funds with illiquid financial derivatives often artificially manipulate prices and go to investors to solicit credit, even offering bonuses for their good performance. At the beginning of this year, while major international investment banks were singing short of China, they were building positions and applying to increase their QFII quota on a large scale. But none of them fell, demonstrating their yin and yang nature undoubtedly. In fact, all financial market participants, including managers, are determined by their interests, and Greenspan is no exception. If he was still the chairman of the Federal Reserve, believing that the subprime crisis would not be avoided, could he still find answers for irrationality? Following closely the United Kingdom and the United States, financial civilization began to strike the Chinese coast. Consistent with the rapid development of China's economy to this end, China's capital market seems to have matured overnight. In more than a year, the securitization rate has rapidly reached %. Obviously, there is no acclimatization of financial civilization in China, and the most suitable terrorist prospect for Chinese financial civilization lies in the national character itself first. Smart and flexible, China has always had the tradition of eastward spread of Western learning has spread to the East, and foreign things are used in China. Having suffered from the loss of financial giants in storytelling, they quickly changed their minds to become masters of their own. For example, among a share-listed companies, the increase in issuance is ostensibly aimed at improving their operating ability and strengthening their main business. But in fact, there are not a few people who use the money they have raised to speculate in new shares. In the process of promoting marketization, administrative monopoly has also been strengthened, which is precisely the expression. Competition among countries, and at least politics, culture, technology, national security, international relations, etc. are also affecting the operation of finance, and there are not many conspiracies involved. With the increasing efforts of various countries to rescue the market, the dilemma of deleveraging while also amplifying liquidity has emerged. For example, major countries have allocated trillions of dollars in emergency aid each year, which seems to have increased unabated and may lead to untreated old wounds and new diseases. And with the continuous evaporation of currency, the original sin of finance has been playing a role. This book is an excerpt from Foucault analysis published since, as a specialized service for government departments and enterprises. The internal research report provides decision-making support focusing on objective, neutral, and empirical analysis, interpretation, and trend analysis. Therefore, the articles are all based on economic reality as the research starting point. Although they are independent, the internal logic is interconnected, and the fundamental clue is the context of the occurrence and development of things in the real economy. In order to truly reproduce the development situation at that time, the editing retained the events, numerical information, and judgments from the writing of a single manuscript. This is a reminder to avoid misreading. Of course, there are historical reasons for the insufficient capital and high debt and leverage ratios of Chinese enterprises due to, under the traditional system, the main funding for enterprises comes from government grants, and only working capital is provided by banks. At that time, the debt ratio and leverage ratio of the enterprise were both at a very low level. Due to the inclusion of corporate profits in national finance, enterprises generally lack the ability to generate internal financing. After the reform and opening up, due to the extremely difficult national economy. The national finance also fell into the dilemma of two proportions decreasing, where the proportion of fiscal revenue to national income and the proportion of central fiscal revenue to the entire fiscal revenue decreased. In addition, state-owned enterprises faced historic reforms, and relevant departments decided to implement the allocation to loan reform, which means that the financial support for enterprises changed mainly from fiscal appropriations to mainly bank loans. The debt and leverage ratios of Chinese enterprises immediately skyrocketed at the end of the 20th century due to the heavy debt burden on enterprises. Relevant departments pushed the loan-to-investment reform will convert some loans to enterprises, mainly state-owned enterprises, into investment equity for enterprises, accompanied by the arrangement of debt to equity, in the hope of reducing the debt ratio of enterprises and reducing their debt costs. However, the progress of this reform has not been smooth. The debt ratio, leverage ratio, and debt expenditure of Chinese enterprises have always maintained a relatively high level. In this situation, the channels for internal financing of Chinese enterprises are very poor, and excessive reliance on external financing is inevitable. This pattern makes the contradiction between China's financial and physical sectors more prominent than other countries. In sum, I believe that the Financial Mystery, a comparative study of the German financial system, is a breakthrough for China, the solution to the dilemma of financial services for the real economy, provides a thoughtful and actionable reform approach. This approach can be summarized into two main points. Firstly, to streamline the relationship between the financial sector and the real economy sector with the fundamental direction of reducing financial intermediary costs. Exchange members holding exchange member stocks, and all financial institutions can participate in securities trading (ISUOs) activities. Abolish various financial investment regulations, and banks began to provide comprehensive financial services, including securities business. In full OMS of regulation, the Bank of England has transferred the regulatory function of the banking industry to the Financial Services Authority of the UK. The financial Big Bang in the UK completely destroyed the financial division of the UK and Commonwealth countries and promoted the integration of merchant bank business and stockbroking business, as well as the integration of commercial banks and investment banks. Commercial banks in the UK have successively acquired and merged securities brokers, gradually emerging a group of super financial institutions, covering various fields such as banking, securities, insurance, trusts, etc., becoming a versatile financial group similar to Germany. Just as the Thatcher Revolution triggered a wave of global market-oriented reforms, the City of London's finance exploded. The explosion triggered a global wave of financial liberalization. Japan Tokyo financial explosion. Japan's financial liberalization reform directly refers to the sample of the UK, which is called the Tokyo Financial Big Bang. This is short. The Hashimoto Cabinet of Japan was launched on July with the core of promoting Financial liberalization by relaxing financial regulations. The main legal basis of the Tokyo financial explosion is the Foreign Exchange Control Law and the Bank of Japan Law. The main content is that Japan will relax foreign exchange trading restrictions, and the venues for foreign exchange trading are not limited to licensed banks. And even supermarkets can engage in currency exchange. Japan's financial industry is officially moving towards free competition.